most of the critical points. Now, at the inception, let's start with zero rated supply. So the first transaction which we are going to understand is zero rated supply. Now in case of zero rated supply, would you be eligible for a refund of tax paid on purchases? The answer is yes. Now what is zero rated supply? There can be two transactions which are covered in zero rated supply. One, export of goods or services. Second, supply of goods or services to a SEZ unit or developer. These two areas can be covered in zero rated supply. Now I am a person who is carrying out a zero rated supply. I am exporting or I am supplying to a SEZ. On my purchases, whatever I pay as tax, that is available as ITC. Yes, it is available as ITC. Now what do I do with that ITC? Because ITC has only one use, and that one use is paid for using output. That's the only use of ITC. Now this ITC can be refunded. Government will convert this ITC into cash, which is a much more usable asset which can be used across board. So tax which I have paid on purchase, I get a refund of that. There are two methods in this. One, I can export with payment of tax and I can export without payment of tax. In both the cases, I don't collect GST from my recipient. In both these cases, I don't collect GST from my recipient. When I say with GST, I will pay that GST from my pocket. And it's always IGST because it's an export transaction regarded as a interstate supply. Plus SEZ supplies are also regarded as interstate supply. So when I supply with GST, I will use ITC balance to pay that output. And thereafter, this entire money which I have paid will be given to me as refund. For instance, say suppose my ITC balance is 15,000. My output on export is 18,000. I will use 15,000 of ITC and pay 3,000 in cash. Yes. So out of my pocket, I have given an asset of ITC that is 15,000 and cash of 3,000. Government will give back 18,000 to me. That means technically government has converted 15,000 into cash. That's the benefit in case you export with payment of GST. Now if you export without payment of GST, that's under a letter of undertaking or under a bond. Now in case you export under a letter of undertaking or bond, government says, I will give you refund of tax paid on purchases to the extent of input and input services. Only to the extent of input and input services. And I might also have domestic supply. So government has given a formula that only to the extent of this formula can you claim input tax credit. And what's that formula? The formula is turnover of zero rated supply of goods plus turnover of zero rated supply of services divided by adjusted total turnover into net ITC. This is the formula. Now this net ITC covers only input and input services. And there are some exclusions as well. Net ITC is ITC taken on input and input services. CBIC has clarified that you can club different financial year refund applications together. So the frequency of filing refund application is completely on you. It could be monthly, it could be quarterly, it could be half yearly. In fact, CBIC has said that different financial year refund can be clubbed together. Now, let's try to understand the meaning of each of this. And remember, why did I not mention any formula for with GST? Please understand, if I am supplying with GST, that is IGST, the IGST which I pay using ITC or e-cash ledger, that entire IGST is given back to me. So there is no need of any formula for zero rated supply with payment of IGST. Okay. Now let's try to understand each word. Turnover of zero rated supply of goods. This is goods supplied without payment of GST. It's not with payment, because with payment will not be considered as the numerator. When I say zero rated supply of goods, here obviously we are talking about goods supplied without payment of GST. Now, till here it was very simple. Then an amendment was brought for November 20. What was the amendment? You will use the zero rated supply price or 1.5 times of domestic price, whichever is lower. Now imagine my export price is 180 while my domestic price is 100. Then government is saying, for the purpose of turnover of zero rated supply of goods, I will use 100 into 1.5 times, that is domestic versus export. Domestic comes to 150. Export, I am exporting for 180. Government is saying only consider 150. Only consider 150 because whichever is lower. So export price or 1.5 times of the domestic price, whichever is lower. Sir, say suppose I don't supply domestically. If you don't supply domestically, in such cases, trouble does not end. You'll have to find a similar transaction and thereafter compare it with 1.5 times. That's the basic difficulty in this particular amendment. Yes, so that is about zero rated supply of goods. Now talking about zero rated supply of services. Now when I say zero rated supply of services, the law is very clear. Zero rated supply of services, it will be considered as part of numerator only and only if two things are satisfied. One, you have raised the invoice plus you have received foreign exchange. Until and unless both these are satisfied, it will not be considered for the purpose of export. So it will fall under turnover of zero rated supply of services only when I have raised the invoice plus I have also received foreign exchange. For instance, I am standing in August month. August month I raised the invoice. September month I received the payment. In which month will it be considered as turnover of zero rated supply of services? Only in the month of September. That is when both the conditions are satisfied. It gives a complete definition of zero rated supply of services, but in essence, in short, the meaning of it is when both the conditions are satisfied. That means, say suppose I have received an advance towards a service for export purposes, it will not form part of numerator, it will not form part of denominator. Now, I have a question here. Say suppose exempted goods are exported. Will it form part of zero rated supply? The answer is yes. Zero rated supply is so strong that it can convert even an exempt goods or services into a zero rating. That means you will be eligible for ITC, you will also be eligible for refund. So zero rated supply is very, very strong. Exempt goods or services exported, it will qualify to be zero rated supply. Now, let's try to understand the meaning of net ITC. Net ITC is input and input services. Capital goods is not included here. Sir, say suppose I want a refund of tax paid on capital goods. In that case, you better go with payment of GST. That's how you will be able to convert your entire ITC into cash. Otherwise, it is not possible to convert that capital goods ITC into cash. Remember one thing. Do you get the ITC on capital goods? The answer is yes. The answer is yes. But for the purpose of without payment of GST, you don't get a refund for tax paid on capital goods. That's one industry point which we are trying to defend from the time refund came in service tax and central excise. But till now, the provision still remains same. So tax paid on capital goods, ITC available, but you will not be able to claim a refund under without payment of GST. Then there are some supplies which you receive at 0.05%, that is merchant exporter. In such cases, As a merchant exporter, it would not fall under your net ITC, it's excluded. Plus, say suppose you are claiming a refund under deemed export. To the extent you are claiming refund under deemed export, supplies related to deemed export will not form part of net ITC. It's excluded from net ITC, it's excluded from adjusted total turnover, it is also excluded from turnover of zero rated supply of goods. So, if you are claiming under deemed export, then it becomes a separate calculation. We don't consider it as turnover of zero rated supply of goods, neither adjusted total turnover nor in net ITC to the extent of ITC is relatable to deemed exports. Now, adjusted total turnover. Remember one thing, adjusted total turnover will exclude exempted goods or services which are not exported. Again, will exclude exempted goods or services which are not exported. Say suppose it is exported, then it becomes part of adjusted total turnover. But other than that, if there is a exempted goods or services which is supplied domestically, then it will not form part of adjusted total turnover. Makes sense as well, because in net ITC, do you consider something which is exclusively used for exempted goods or services? The answer is no. And that's why government is very clear on this aspect that adjusted total turnover will be excluding exempted supplies. And remember, for services, that is turnover of zero rated supply of services, whatever you take in the numerator, the same thing will come in denominator. Whatever you take in the numerator, the same thing will come in denominator. That means whenever both the things are satisfied, which both things? It is invoice and payment. When both the things are satisfied, in that period, it will be regarded as zero rated supply of services. See, when I say a tax period can be monthly, quarterly, half yearly, yearly, based on when you are filing the refund application. Yes? Okay. So this was about zero rated supply, where you have two methods. Don't forget one important aspect. In case of zero rated supply, please don't collect tax from your recipient. That's not permitted, because government is giving you a refund of entire tax, whether you pay with GST or it is a transaction without GST. Now, whenever we talk about zero rated supply, some questions arise. Whether I should adjust IGST, refund should I claim first, C or S? CBIC has clarified it now. IGST will be first utilized. Then C and S will be utilized for same proportion. But if there is an excess amount, then you can take it from the ledger in which balance is available. So, say suppose you are to claim a refund of 1 lakh. First, check ITC balance of I, that you will claim as refund first, I. Then C and S in equal proportion. Thereafter, if some amount is still to be refunded to you, then use the ledger which has the amount. Clear? Yes. Plus, government has also clarified that we will be using GSTR 2A data. That means whatever invoices are coming in GSTR 2A, based on that, refund would be available to you. Here that 10% margin will also not apply, because circular is very clear that whatever is coming in 2A, based on that 2A, you will be eligible for refund. Okay, so this was the first one. The second discussion which we are going forward with is inverted tax structure. Very important. What is inverted tax structure? In case of inverted tax structure, what happens? My output is subject to a lower rate, my input is subject to a higher rate. Output, lower rate, input subject to a higher rate. I can claim a refund of tax which is being accumulated as ITC. Now government has given a formula for this as well, and the formula goes like this: turnover under inverted tax structure divided by adjusted total turnover into net ITC. The worst part is this net ITC will be only inputs, nor capital goods, nor input services, only inputs. And once you find this proportion minus tax payable under inverted tax structure. So whatever tax you have paid under inverted tax structure, that would be subtracted, and if there is any differential amount, you will get a refund. Plus, it is also clarified by CBIC saying that if there is a trader, now what happens sometimes is, sometimes when the product was subject to 18% GST, government has reduced the GST to 12%. When I purchased it, it was 18%. Now the price or the GST rate has been reduced to 12%. In such cases, my output will be lower now. I am a trader. Can I claim refund under inverted tax structure? CBIC has said no. A trader would not be eligible for claiming refund under inverted tax structure even if the rate of tax is reduced by government. Will not be eligible. So my purchases might have been at 18%. I am going to sell it at 12%. Still I will not be eligible. So inverted tax structure is basically for manufacturers. They'll be able to claim it very easily because it is so possible that your input is subject to a higher rate and the manufactured product which comes out of it is subject to a lower rate. Examples of that is agarbatti industry, where inputs are subject to a higher rate, output is subject to a lower rate. Footwears, again, input is subject to a higher rate, output is subject to a lower rate. Yes? Okay. CBIC has also clarified that compensation cess also is eligible for ITC and you can claim a refund of compensation cess as well in case there is an inverted tax structure. And the adjusted total turnover definition remains same. Then the third discussion which we will have is a new rule, that is rule 95A. Now what is this rule 95A? This is for shops in the departure area of an international airport. In the departure area of an international airport, you have seen shops. They sell goods duty free. Now, they can claim refund of tax which they have paid on purchases. Listen to me very carefully. International airport, I have a shop. That airport departure area shop sells goods to international tourists who are outbound passengers, meaning they are going outside India. In such cases, I don't charge them GST because they are going to take it outside India. It is treated as an export transaction. Now the question is, what about the tax which I have paid on purchases while bringing that product to my store? See, I would have purchased it locally. In such cases, I have accumulated ITC and I am supplying it to that international tourist without charging any tax. In such cases, will I get refund of tax paid on purchase? Government has come up with a rule, rule 95A, saying that yes, you will be eligible for tax which you have paid on purchase. But 1-to-1 correlation has to be there. Plus, you can sell this to only an international tourist, not to Indians going outside India. International tourists, you should receive foreign exchange, plus you should not charge GST from that international tourist. All three conditions satisfied, you will be eligible for refund. Who are you? You are a shop owner at a departure area of an international airport. Yes? Okay. Now let's come to the fourth one. Our fourth discussion will be with regard to a very important point, that is merchant exporter. Now, who are these merchant exporters? These are basically traders of export goods. See, not every manufacturer is capable of carrying out an export transaction because there are various formalities. So what he could do is, he can tie up with a merchant exporter. What this merchant exporter does, he does a lot of exports. It's his regular business. So what he does, he purchases from this manufacturer and then exports it. Sir, purchases from a manufacturer and then exports it. In that case, first manufacturer will charge GST to merchant exporter. Merchant exporter is exporting. He'll be able to claim refund. Now, merchant exporter was facing a lot of issue because See, we say refund will be available, but getting that refund money from government takes a lot of time. Till that time, my working capital gets stuck. That's why government came up with a scheme that if you are a merchant exporter who is registered with Export Promotion Council, in such cases, supply would be made at 0.1%. That means manufacturer will supply it to me. I am a merchant exporter. Manufacturer will supply it to me at 0.1%. And then I will export it. 0.1% IGST, 0.05% CGST, 0.05% SGST, which is very, very low. Now can you claim a refund of this 0.1% under zero rated supply? The answer is no, because it is excluded from net ITC, it is excluded from adjusted total turnover, it is excluded from turnover in zero rated supply of goods. So this 0.1% government will eat away, and they are happy. They are happy that 0.1%, no issues, I will pay this on my purchase. At least I don't have to get into the hassle of claiming refund under zero rated supply. So a very good scheme for merchant exporters. But there are some formalities, like you have to give that certificate that you are registered with Export Promotion Council. You have to inform the jurisdictional officer, submit him the proof of export by taking it from the merchant exporter. Merchant exporter has to give the proof to the manufacturer supplier that the goods have been exported. All these formalities met, yes, you will be eligible for a 0.1%. Now think from the angle of manufacturer exporter. See, manufacturer exporter has supplied it to me at 0.1%. But on his purchases, he would have paid 18%, 12% on his purchases of raw materials, of various other products. In such cases, can the manufacturer claim refund? The answer is yes. Manufacturer will be able to claim a refund under inverted tax structure. Why do I say inverted tax structure? Because see, from the angle of manufacturer, he is purchasing at 12%, 18% and supplying it at 0.1%. So it's a case of inverted tax structure. He would be eligible for refund in case of inverted tax structure. Clear with this? Yes. So this is about merchant exporter. The next important transaction is deemed export. Now when we talk about deemed export, what happens in case of deemed export? See, in case of deemed export, first of all, the law regards only 4 transactions and deemed export. This is only relation to goods. Goods manufactured in India, 4 transactions are eligible for deemed export. The first transaction is supplies made to a EOU. If you are making a supply to a export-oriented unit, in that case, it is eligible as deemed export. Second, supplies made against advance authorization holders. Third, supply of capital goods against EPCG license holders. And gold supplied to public sector undertakings or public sector banks to the extent of against advance authorization. These 4 transactions are considered to be deemed export. Now, I am a person who is making a deemed export. I have 2 options. See this. I am a person making deemed export. I have 2 options. 1. I charge GST from the EOU and then EOU claims a refund under deemed export. That is 1. In that case, I am free of any burden. I don't have to go to the department because I have charged GST, collected GST and I am happy. Second case is, I supply to EOU. I pay GST from my pocket and then claim a refund of that GST which I have paid from my pocket. That is option 2. So, remember one thing, zero rated supply can be without payment of tax. But deemed export can never be without payment of tax. In case of deemed export, there are only 2 alternatives. The first alternative is, I charge it from the EOU, collect it from the EOU. If I collect it from the EOU, in that case, I don't have to worry about any refund because I have collected the tax. But in case I don't charge it from the EOU, I still have to pay it from my pocket. That amount which I pay from my pocket, I can claim a refund of that. Now tell me one thing. When I am claiming refund under deemed export, can I also include it in net ITC here? Can I also include it in net ITC here? Yes, no. The answer obviously is no. That's why the definition of net ITC excludes supplies which you receive at 0.1% and supplies where you are claiming a deemed export refund, because there are separate provisions for that. That's why it is excluded from net ITC and adjusted total turnover. Fine. The next transaction is, now we are coming to simple transactions. UN or embassy. Hey, can a UN or embassy claim refund? Yes. See, for all the cases, the time limit is 2 years. And for zero rated supply, 2 years if you are claiming without GST, meaning you are claiming refund of tax paid on purchases, unutilized ITC. In such cases, the time limit is due date for filing return for that period, and 2 years from there you can claim refund. If it is with GST, then it depends on whenever you have exported the goods that time, and for services it would be goods you raising the invoice plus you receiving the payment, whichever is later. Once both the events are completed, that would be considered for services. That is about zero rated supply. But in essence, what is the time which you get? You get 2 years from this date, which is called as the relevant date. 2 years from the relevant date is the time limit in which you have to apply for refund. Inverted tax structure, again 2 years from the due date for filing GST return related to such particular transaction. Shops, international airport, nothing, date of payment of tax will be considered. Again 2 years is applicable. Merchant exporter, see, merchant exporter is getting supplies at a lower rate. Inverted tax structure, the limit of 2 years will be applicable. Deemed export, again 2 years from the date of filing return for such period. UN or embassy is different. They get 18 months from the end of the quarter in which the supplies were received. See, UN or embassy output is not liable to GST. They making purchases, they are eligible for refund. What is the time limit for that refund? 18 months from the end of the quarter in which the supplies were received. This was 6 months earlier, and government extended it to 18 months. Then, say suppose any money is lying in your e-cash ledger, can you claim a refund? The answer is yes. Now there you have two options of money lying in e-cash ledger. One, you can transfer within e-cash ledger under any of these sub-ledgers. Second, you can also claim a refund of money lying in e-cash ledger. Sir, the TDS TCS which accumulates when I supply to government department or I supply through e-commerce operator, sir, can I claim it as refund? The answer is obvious yes, because it is lying in your e-cash ledger. Again, 2 years is applicable throughout. It's only UN or embassy where 2 years is not applicable. Okay. Then you have a transaction of refund voucher. Hey, what happens in refund voucher? See, refund voucher, I issued a receipt voucher when I received an advance, and I received an advance for services. So I have already deposited the tax to government. Now I refund the amount. Now if I am refunding the amount to my customer because he does not want the service, in such cases, the tax which I have paid on my purchase, the tax which I have paid on my sale, that on the advance amount I have already deposited the tax, that can be claimed as a refund. So you have to submit the refund voucher, you have to submit the receipt voucher, confirmation that you have refunded the amount, government will give back the money to you. Sir, what if I have raised the invoice? Hey, if you have raised the invoice, then you don't have to go for refund application. If you have already raised the invoice, then issue a credit note and square it off. Thereafter, there is no need to file a separate refund application. So that is better, na? So whenever you receive an advance, you can go ahead and raise an invoice so that later on, if you are refunding it, you can raise a credit note and adjust the taxes. Clear? Okay. Then you have a case where wrong place of supply is mentioned. Hey, you remember this wrong place of supply? Say suppose you have paid C plus S instead of I. Sir, I have paid C plus S instead of I. So what should I do? I should first pay I and then claim a refund of C plus S. Now that C plus S which you are claiming refund of, that is this provision. Clear? Okay. Again, the time limit is 2 years from the date of payment of tax. Then you have a case of tourist. Hey, this tourist provision is not activated till now, but yeah, international tourist. See, whenever you are supplying to a tourist, first of all, it would be regarded as a IGST transaction. It is not in place today, so we don't read it in detail. So tourist, what would happen is, if a tourist purchases something in India, he would be paid IGST. That IGST he can claim as refund at the departure counter of the international airport for goods which he is taking outside India. We are not talking about services which he has consumed in India or goods which he has consumed in India. We are only talking about goods which he is taking with him outside India. In such cases, he would be able to claim a refund. Yes? Okay. Now, let's discuss some important points over and above all these refund cases. First is Rule 96. See, Rule 96 basically is for with payment of GST. In such cases, you have to pay IGST. The moment you export, file a shipping bill. Those shipping bill information has to be entered in GSTR1 and GSTR3B. The data has to be entered. Once that is done, you can file an application. System will verify that application and you will get refund of IGST which you have paid on purchase. Meaning IGST which you have paid while exporting that particular goods. Rule 96A deals with LUT or bond. That means we are talking about goods exported without payment of GST. Here now you have to give a declaration. What declaration do you give? You give a declaration saying that I will export the goods within 3 months. And if I don't export the goods within 3 months, within next 15 days, I will pay the tax amount. That's the declaration for goods. For services, the declaration is I will get foreign exchange within 1 year. If I don't get the foreign exchange within 1 year, in that case, I agree to pay you the amount of GST on such services within 15 days after the expiry of 1 year. That's what you undertake. That is letter of undertaking. That's what you undertake. That's what government can ask a bond for. Now, this is the process part. Then you have one new rule which is inserted is Rule 96B. Now, what is this Rule 96B? In this Rule 96B, government has added a condition. See, export of goods did not have a condition that you have to receive foreign exchange. That was not there. But now government has added a new condition saying that whenever you are exporting goods, you should receive foreign exchange within time limit given under FEMA. If you don't receive the foreign exchange within time limit given in the FEMA, in that case, you'll have to refund the tax which has been refunded by government. You'll have to give back the tax to government which you claimed as refund. So this condition was not there, just added newly for November 20 exams that in case you claim a refund, export the goods, but you don't receive foreign exchange, in such cases, you will have to refund the amount back to government. Clear with this? Yes. Obviously applicable for May 21 as well. 96B, be very careful about this one particular point. Then government has also clarified on sale on approval basis transactions where you take the goods outside India. See, when you take the goods outside India, it is not a supply. Once it is accepted by the person outside India, it will be regarded as a supply. And once it is regarded as a supply, that would qualify as zero rated supply. To that extent, you can claim refund. But say suppose some goods are not accepted by the other person, then in that case, if this time limit expires, you will have to pay the tax to government because it's not a export transaction. Yes. Okay. Sometimes it so happens that I outsource some work. Say suppose I have got a contract from US person. He is going to pay me $5 lakh. He's going to pay me $5 lakh. I contact a person in US and tell him, you do some amount of work, I will pay you $2 lakh. Balance I will execute it from here. So I am getting $5 lakh and I am paying $2 lakh. For the purpose of export, what will be considered? 5 lakh or 3 lakh? Because sometimes what happens is, I will say the US guy, pay $2 lakh directly to that person and balance 3 lakh you paid to me. In such cases, CBIC has clarified that export will be to the extent of $5 lakh and $2 lakh which you are getting transferred from there only, that is a import of service. Now when it is an import of service, you have to pay tax under RCM. Once you pay tax under RCM, you will always be eligible for claiming refund of this. Reason being, you are into export. Are you clear with this? Yes. So that's another circular which has been issued by CBIC with regard to refund claim. Last point, interest. Say suppose the officer does not pass the order within 60 days. Once I file the complete application and he has not come up with any deficiencies, in that case he has to pass an order within 60 days. Normally it does not happen, but see what happens if he does not pass within 60 days. I'll be eligible for a interest of 6% per annum if it is from a normal refund application. If it is through a judgment where it has gone to the courts, the interest will be 9% per annum after the expiry of 60 days from the date of filing complete application. Government also provides that in case of exporters, a provisional refund of 90% can be given, and thereafter balance 10% can be given after the application is completely scrutinized. Now what happens in case your refund application is rejected? Say suppose you have applied for ITC, unutilized ITC, and your refund application is rejected. In that case, that amount will come back to your e-credit ledger. And finally, don't forget one point. You cannot claim refund of tax which is not there in your ITC ledger. Say suppose you have good domestic supplies and you have export supplies. Your ITC balance is 0. Can you claim a refund based on this formula? The answer is no, because your ITC balance is not there. In such cases, obviously you will not be eligible to claim refund. Clear with this? Yes. See you all in the next video.